Hello people, this is Harsha. Welcome to my channel. I make videos on education, career, lifestyle and most importantly learning. My long-term vision is to expand the curiosity and consciousness in the field of education so that we all can become the change makers of the country. So let's get started. So we are going to talk about one of the most important concepts, mutual funds. I really hope that everybody are familiar with the term mutual funds, but not many are familiar with the idea of what mutual funds is exactly about. Whether it is in stock market, whether it is related to stock market or something else, whether mutual funds are risky or not, whether mutual funds are safe for us, whether a normal retail investor like us can invest in mutual funds or not. There are many questions. Today, I'm going to talk about all these questions and give you a clarity whether it is for us or not, whether one can try to invest in mutual fund or not. That is what we are going to deal. So let's get started. What is a mutual fund firstly? So for knowing this, let's go to the Oxford definition. What is mutual funds? So according to the Oxford dictionary, an investment program funded by shareholders that trades in diversified holdings and is professionally managed is called a mutual fund. Simple as that. So one of the main attributes that a mutual fund carries is that it is professionally managed. That is, for example, if you buy a stock X in the stock market directly, you are responsible because you studied the stock, whether you heard about the stock and you just bought it, you are responsible for the stock completely. Whereas in a mutual fund, the fund manager will buy the stocks with your amount and he becomes responsible for all those stocks. When he finds that stock price is not good, whether he finds that stock is not so well balanced, then it is his responsibility to sell or hold or do whatever he wants. At the end of the day, he has to balance your portfolio because the objective of the mutual fund makes him responsible to do such things, right? So a mutual fund is something that is a pool of people. There are so many people, like thousands, hundreds of people. They join together and start a club type of fund which invests directly in the stock market. But you don't directly take decision, but rather your fund manager takes decision on behalf of you so that you get the best professionally managed stocks in your portfolio. So this is very advantageous for people who doesn't know ABCDs of stock market, and they can really rely on the fund manager's intelligence and fund manager's statistics over the past years. There are many fund managers that are exceptionally well. They give returns that are above the benchmark, which satisfy the retailers all the time. So mutual funds are something that are beneficial for people who doesn't know the insides and outsides of the market, but they really want to be in the market, but they haven't got the technicalities, they haven't got the fundamental analysis and stuff. So that is why they can rely on a fund manager who manages a fund which is called a mutual fund. Why is it mutual fund? Because there are people who are clubbed and buying a piece of share, right? So you get units rather than shares. That is what a mutual fund is all about. You buy the units of the mutual fund, and the units carry a value called net asset value, NAV, and this net asset value will determine your increase or decrease, right? So this is how you really understand, or this is how you really buy and understand about your mutual fund. How do you buy a mutual fund? It is very easy. In the times of online presence, everywhere we have got an opportunity to buy mutual funds. All that you need to have is a bank account and you need to get it KYC. So whether you can have a demat account or you can register in the company's website, you can invest it directly. Even apps like Paytm and Upstocks or like Zerodha or any such discounted broker apps are also supporting in helping to invest in mutual funds, because financial security is most important and that cannot be ignored. That is why businesses are also promoting campaigns that one must have to invest, one must have to save money, one must have to invest in mutual funds or stock market, one must have a steady mind or whatever. Because financial education is something that is not taught in schools rightly. That is why individual has to learn it on his own. So mutual funds are easy to invest, mutual funds are easy to understand, mutual funds are easily managed and professionally managed by the fund manager. So one must be very satisfied that a mutual fund is good for him or her. So let us understand what are the advantages and disadvantages of a mutual fund. So coming to advantages, the most advantage I feel is that diversification. You see, with 5,000 rupees you can either invest in one stock. With 5,000 rupees in a mutual fund you can invest in 20 stocks. So in 20 stocks you're getting a diversified portfolio. With rupees 5,000, if you are buying a single stock in the market, you're just getting one share. But with that 5,000 rupees you can buy for 20 stocks, and you have that authority over 20 different stocks, which is differently diversified. Maybe one can be in a paint sector, one can be in a banking sector, one can be in something insurance sector, whatever. It's up to the fund manager, and you get that diversification, which is very advantageous. If one stock goes up and one stock goes down, you get a balance. Whereas in your case, where you invest in that one share for 5,000 rupees, if that stock price goes down, you again become trembled because your stock price fell down. So that is one big advantage of mutual fund, because you get a diversification. And next important diversification or next important advantage which I feel is management. Because your fund house has got different wide range of management which works on statistics, which works on data, which works on information, you are always professionally informed whether you are doing well or not. Weekly reports, monthly reports, statistics, everything is priorly informed to you, which is very good for the retail investor because he is getting informed very well, right? And third one is reinvestment. There are types where the reinvestment part is very quick. Like there is growth in the mutual fund, and the growth is again reinvested in the mutual fund, which will turn into the compounding effect. You see, at the end of the day, investors only enjoy the fruit because of the compounding effect. The compounding effect is a major role that is played. Other than compounding, you cannot expect a greater return, because compounding develops an interest over interest, and gives you a very good cumulative return. So that is one of the biggest advantage. Another advantage is that it is very easy, simplified process. You don't need to study much about the market. You don't need to read about the market daily. You just need to verify the quarterly results. You just need to verify how the fund is professionally managed or not. Because the fund is actively managed or passively managed by the fund manager is informed to you every weekly report, right? So you don't need to worry about it. It's very simple as that. You just don't have that headache when you invest in a mutual fund. So coming to disadvantages. So these are some advantages, but coming to disadvantages, there are some disadvantages as well. Because if there are advantages, obviously part is disadvantages also exist. So one of the main important disadvantage I feel is that the exit load burden. What is this exit load burden? See, when you invest in a mutual fund, what the mutual fund expects is that you retain in that fund for a longer period of time, say just 2 years or 3 years. But what if you come out of the fund for the next 3 months? It charges a penalty that is called exit load. Because you are not in that fund for a good period of time, it charges an extra penalty of 2% or 3%. So this is quite a big burden, because many retail investors feel that after investing in the fund, maybe they feel that it's not a good fund, we have to strip the fund. If that is the case, mutual fund charges an exit load. Maybe sometimes it may go to 2.5 to 3% as well. Next thing is that expense ratio. It is one of the disadvantages of the mutual fund. What is expense ratio? You see, mutual fund is a company. Mutual fund is a company. A company has staff, it has administration duties, it has completely filled with employees. So they have to pay management fees. So who pays the management fees? It is you. That is what? An expense ratio. For example, generally a large company such as Aditya Birla or Nippon or Reliance, large asset management company, they have a expense ratio of 1 to 1.5%. That is, if you get a return of 15%, or 1% is cut for expense ratio, which is very what do you say, normal for any company, because the better the company, the lower the lower this expense ratio. If the fund is new, then the expense ratio may even trigger to 3% as well. So that is one of the most important characteristic to even determine whether you have to invest in a mutual fund or not, depending upon the expense ratio and exit load. So these are some of the disadvantages, and there are different types of mutual funds. There are actively managed mutual funds, passively managed mutual funds, and equity mutual funds, debt mutual funds, hybrid mutual funds. There are different mutual funds. Depending upon the risk factor of the individual, one must have to choose a mutual fund. It's not the case that, for example, if you want a higher return in a longer period of horizon, then you have to choose an equity mutual fund, because it gives you a very good return. For example, 15 to 16% in the long term for the next 5 years you can expect in an equity mutual fund. Whereas you want a liquidity, you go for liquidity funds, where you want to remove your money in a very short term period of time, then you have to go for liquidity funds. If you want to invest in foreign companies, then you have to search for arbitrage funds or international funds, or funds that are actively managed in international stocks. So depending upon the interest of the investor and the risk factor of the investor, one must change, one must adapt the choice of preference of mutual funds. So this is how you select a mutual fund. If you want me to make videos on how to select mutual funds, I'm always ready to do it. It's just that you need to comment in the comment section below to make, and I will definitely make a video about it. And selecting a mutual fund is also an important task, which I have already explained before. But selecting a mutual fund is more important than anything else, because once you selected a mutual fund, you will get a clarity whether this mutual fund is doing good or not based on the past data. But you need to analyze many other things, such as you need to verify the fund house, you need to verify the historical performance, you need to find better fund managers or not. You need to verify whether this fund manager is really generating that good amount of return than the benchmark or not. And you need to verify the key ratios. What are the key ratios? There are ratios that determine the mutual fund performance, and you need to verify these as well. Where do you find this? You can find in the mutual fund website as well. You can go just check it out. Generally, investors education is common in any mutual fund company. They always provide this information in their website. You need to check it out. And other factors such as I have told you, exit load, entry load, expense ratio, these are all such other factors. You need to verify all these things, and then only you should go for selecting and identifying and investing in a mutual fund. So now, final question: will an investor like us, will a retail investor like us, should invest in mutual funds or not? If that is the question, ask it to me. Then I would say one thing: if you don't understand the market broadly, then don't invest first of all. If you don't understand the basics of market, please read about the market firstly. Please understand how the market is fluctuating, why the market is fluctuating. Please get familiar with the vocabulary of the market, then you start investing in stocks or mutual funds. But if the question is, I'm really good with all this vocabulary, I'm really good with stock market and stuff, so should I first invest in stock market or should I first invest in mutual funds? If that is the question, I would first say, first invest in mutual funds, then go for stocks. Why? Because mutual funds gives you that extra edge of taking a risk, whereas in stocks you just go for a blind run. I mean, if it is not fundamentally analyzed, if it is not carefully analyzed by that that professional or you, then you would go for a high risk. Because generally what a retailer does is that if the stock price moves high, he thinks that it is because of his intelligence. If the stock price moves down, if he blames the market. That is the main problem of a retailer right now. So what if the stock price goes completely down? You go and sell it because it is not fundamentally analyzed. If the business is good, better go and invest. If you don't understand the fundamentals, just stay calm and go and search for the right mutual fund. But don't ever stop investing. That is what I recommend. You should start as early as possible to gain that extra edge over others, because in the times where inflation is getting up and up and you don't have a security of a government job or whatever, you don't have a security of finance, you need to really focus on investing in different platforms. But an investment should be backed by research, The investment should be backed by financial statements that are analyzed by a professional or you. That investment should be backed by complete research oriented methodology. Every time you should invest with proper research. If you're not doing such things, don't ever invest. That is my first ever statement and conclusion. So this is the whole science of mutual funds, and this is how you target a mutual fund and invest in a mutual fund if you want to really invest. So if you want me to make videos on such things like mutual funds, stock market, stocks, how to pick a stock, or what is the stock market basics, what is the stock market vocabulary, different books on stock market, I'm ready to make it. If you just comment in the comment box below about the different things that you want me to make in the field of stock market, I'm sure I will definitely make it. So if you like this video, please do like it, share it, and subscribe to my channel, and please hit the bell icon. So thank you for watching the whole video. See you. Lots of love. Bye.